everyone. This is Sandeep from Akshamani Works for you. Just wanted to update our views on markets right now. The quarter which is gone by was a blockbuster quarter in terms of the kind of earning growth that we got. Nifty earning has gone up some 18%, and mid and small cap earning is also up mid-teens to 20-25% approximately. So it is probably one of the best earning quarters in long time. Maybe after 4 or 5 years we've seen this kind of earning growth, and it is pretty broad-based earning growth with like 18-20 of the sectors outperforming the estimated earning growth. So that has been a good part. A lot of this earning growth is probably come because of low base effect, because of tailwinds which are there because of currency depreciation, the GST rate cut, and also the interest rate cut which happened last year. So there were some tailwinds on account of that, which kind of propelled the earnings this quarter. We need to see how this trend sustains over next couple of quarters. Besides that, now because the market has been sideways for almost 2 years and earning growth has been reasonably okay, particularly for the last 3 quarters, what has happened is the valuations have corrected very sharply, and Nifty now trades at a valuation which is close to what it was between say January to July of 2020, or it is similar to what it was say in January to March of 2016, or during the demonetization in November December 2020 2016. So it is one of the cheapest valuations as far as Nifty is concerned. Mid and small cap valuations are slightly expensive, but the earning growth is slightly superior in those companies. If you look at the charts are suggesting that market is poised for a very sharp move in the next 4 to 8 weeks approximately. I think what happens in Iran, I think, is probably going to determine the direction of that move. I think whatever we read, I think we have very similar to situation is very similar to what it was in say June of 2026, 2 months back or 3 months back, where uh, the US had blockaded Iran, and they were running out of storage space to store their oil. I think Iran has already completely filled up its inventories on the land, and it's almost on verge of filling up all the inventories in the sea also. So in the next 10 to 15 days, either it has to shut down its oil rigs, or it has to come on the negotiating table, and there has to be some kind of a deal. So I think by the end of this month, I think we should have at least some headway as far as that is concerned, and Iran war is concerned, and I think that should probably give indication of what's to which direction the market moves. Another cue to watch out will be the Federal Reserve Chairman market commentary, which is there in the last week of August. US inflation as well as the unemployment numbers are coming surprisingly positive actually, because of which the rate cut hopes have again got rekindled. So it's possible that he gives a cue in the last week of August in that Jackson Symposium. He could give a cue about what to expect from the in the September Fed policy decision. So he probably could give a cue that they're going to cut rates in Fed September. I think if that happens, that also is a good macro positive for overall risk assets, including emerging market equities. So that is another cue to watch out. I think next 2 weeks is going to be full of action, I think, and market probably is going to take cues from the macros, particularly what happens in Iran and what happens in the Jackson Symposium USA. So that's all I wanted to say. I think we are the overall situation is looking very attractive. I think the only joker in the pack is the oil prices. So long as oil prices behave themselves, I think market is probably wanting to go higher from here. So that's all I wanted to say. If you have any comments or any queries, you can directly send it to me or to your relationship manager. Thank you. Bye bye.